There are questions in life that we will never answer. Don't let your financial situation be that question that never gets answered. There are things in life that we cannot change. Don't let your personal finances be that thing that you never change. There are things in life you cannot control. Don't let money be that thing you can't control. There are things in life we cannot stop. So make arrangements to step aside and let it pass you. Okay? Now, don't let money problems run you over. Step aside, let it pass, gather some knowledge, get this education, apply it, take action. And there are things in life that we are not responsible for. There are some things in life that you and I are not responsible for. Money, on the other hand, is your responsibility in your household to take control of that. Okay? One of the most peaceful statements you and I can both make together is, I don't know. I don't know. Right? That keeps you humble. That keeps me humble. That keeps this community humble. It's just say, I don't know. So help me. I don't know. So let's figure it out together. I don't know. Let's team up. Let's partner. Let's get the numbers on the board. Let's figure this out. All right? So, going into the lesson of velocity banking, for my realtor friend in Indianapolis, contributing at the tier 3 level, she made a commitment. She's like, I'm with you. I'm like, I'm with you too. Let's go. So we're working, starting out income, $5,855. Expenses, $3,602. Current debt, $274, $724.88. And we lowballed cash flow at $500. Some key things before we start velocity banking for this wonderful woman at an Indianapolis area is we need to redirect our money first. Okay? So she's saving money, investing money. I said, let's get our money back, please. Cash flow, thank you. So we redirect 270 of savings, and from her 401k, we cut that off and redirect 800 back to our cash flow. Okay? So you add those three numbers up, you're gonna get close to that number. All right? Now, before we actually get to this whole number here, let's determine our debt weapon. Okay? We have an unsecured line of credit for $15,000 at 8.75%. Awesome. Got our debt weapon. Now, determine cost. 8.75 times 10,000, okay, which is going to be our chunk. So that's the number that I based our costs off of. It's $875 a year, $239 a day, $71.91 a month. Your job is to stay here in any given month in terms of your interest costs on your line of credit. Okay? Now, we determine chunk. All right? We can either base it off the line of credit itself or the cash flow overall. We said 10,000. I like that number. Okay? 10,000 is going to be our first chunk towards 3 specific debts. Okay? She's going to wipe out two debts or 3 debts, right? Yeah, we're going to wipe out 3 specific debts all at once, which is going to increase our cash flow to $222.89. Okay, we're going to get an increase of that number. And the difference, okay, because this amount that we're paying off is like 3,000 and some change, all right? The other portion of the 10,000 is going to go towards another debt, which is going to lower the balance significantly on that specific debt, which is also going to increase our cash flow temporarily. All right, so there's some cases where, you know, you've got like $1,000 on this card and 2,000 on that, and you've got, you know, 4,000 on this loan. All right. Sometimes what I do is, all right, let's wipe out 1, 2, 3 and get quick cash flow here. And then let's also chunk at this debt that you're paying like $500 a month on that car, or that personal loan, like $600, $700 a month or something like that. Let's just throw some money at that from our chunk, okay? Give us a boost, a real nice boost to zero out the line of credit even faster, which then gives us the ability later on to do what? Chunk again. But now this time, all of the chunk is going to go towards that $600, that $700, $800 a month payment. Pretty cool, right? All right. So when doing velocity banking, if you can get this down, I mean, if you can just really hone in on this and really just grasp it, I'm telling you, that's all you need to know. That's it. That's all velocity banking is. You make a chunk, you figure it out, you dump your income into the line of credit after you chunk. Expenses come out of the line of credit to pay bills. Cash flow, right? Cash flow stays in the line of credit, and you rinse and repeat. Okay? The reason why we do this is not only are we chunking at a specific debt, right, really fast, wiping it out, you're also paying back the line of credit itself that you just borrowed from. So therefore, you won't have a monthly payment on that line of credit. On top of doing that, you take that same money that you just paid the line of credit with, your income, and then you pay your bills and your other debts. So that means all her other debts are getting paid as well. So we are expediting, velocitizing the speed at which we pay off debt. And we always come out first over debt snowball, debt avalanche, whatever other strategy is out there. But those are your two common ones. That's why that makes so much more sense. Instead of just using cash flow to attack one debt at a time and be restricted, right? Because understand that when you pay debts, right, using your cash, understand that that cash is now dead money. It sits in an account that you can't access until the whole debt is paid off. And by then, you would have already borrowed more money to buy things and get another house, get another car, or refinance, and just stay in the trap. So it doesn't matter how much money you make or how little you make. If you can grasp this, I'm telling you, game over. Game over. Your life is going to change. Everything's going to change. Your perspective, everything. All right? So, doing simple math, you take the $10,000 chunk, all right? You just created a debt on the line of credit, right? We initially redirected money to increase cash flow. Why? So that we can pay off the line of credit even faster, okay? When we got this $222.89, okay, that went here. So we got a total cash flow of $1792.89 that we're working with, all right? December, January, February, March, 4 months. The line of credit, she'll zero it out. Okay? She'll zero it out. Meaning that the original 10K would get paid even though she's still using that money to pay her bills. She's just going to pay herself back. It's going to give her this ability to make another chunk in March, which is what we're going to do. I'm going to take the same number, 10K, all right, and we're going to chunk at her car. So for my realtor, you already know what to do with that. Come March, conservatively, we're going to take from the line of credit again, 10,000, chunk at that car, increase your cash flow temporarily to 397, and then it's going to go back down to the 1792. Come August, we'll make another chunk, right, which is going to wipe out the car, and then you're going to have another 5K and some change, all right, because by then 10,000 over here plus the other 6,000, right, that we did towards that specific debt that we were talking about, the 600, 700, 800. Well, in this case for you, miss, it's 397 that we get that boost, right? So you got the 6, you got the 10. The total debt on the car was like 22,000. You fast forward all the way to August 2019. That thing is wiped out. So literally 9 months to pay off a $22,000 car note, and your cash flow goes up 397 after August. Boom, now we're working with 2190.58. All right, cash flow gains. I like it. All right, now this 5K is going to give you a boost to the next amortized debt that we're going to tackle. Now, I know you and I, we were talking about, tackling the student loans after we pay off the 3 credit cards and the car. But honestly, I really want to, I don't know, I got a better feeling. I was just looking at the numbers. I'm like, I don't mind letting the student loans just sit there stagnant. It's $145 a month, the payment. We could easily do that. Our cash flow is rocking and rolling right now. And then if you're selling properties and your side hustle starts to pick up, okay, you'll be able to leave your job and then focus on the business and then start making double. And then at that point, you can just throw money at the student loans if you like. If not, I suggest we start on the mortgage, okay? They're your smallest mortgage that you have. And here is a conservative plan based off the $15,000 line of credit. All right. What I did on the board here is basically if we didn't increase the line of credit at all and just kept it the same, let's see what our results would be. So with cash flow of that, you're making $10,000 chunks, safely we can say every 4 months we can make a $10,000 chunk towards the Wells Fargo mortgage. Okay, here's our balance as of 2018, right? Paying $654 a month. There's the interest rate. So you would have to times this number by 9 months, right? Because we're going to get started in August or September. Yeah, August. We're going to get started in August. Okay, so the balance on that mortgage will be a little bit lower. And if you map it out every 4 months, doing $10,000 chunks, this thing will be paid off by 2021, 5th month of the year. What's the 5th month of the year? I don't know. May. Okay. And look what happens to our cash flow. It goes up. The 654, right? Goes up from 2190. Okay. So we're in 2021 now. So far we've wiped out in literally 13 months, right? All of 2019, 1 month left in December, and then 5 months of all of 2020, right? That's 21 months, and then 5 months of 2021. So we're at 26 months, and we wiped out the car, 3 particular debts, a mortgage, and obviously the other mortgage is down, and the other student loans is down, and we did not lose our cash flow at all, right? It's right here. It's in equity. It's in the line of credit. Didn't lose it. Didn't lose my money, right? Okay. Moving right along. Second mortgage started out 2018, December, at 131. Okay. Same thing. Every 4 months, I picked it up a little bit, just a little bit. You make a chunk of 12,000 or 12,500, maybe 13,000, right? But conservative, right? So 12, all right? Right after we pay this thing off in the May of 2021, doing 12K chunks every 4 months, and there's the mortgage payment, 878, at that interest rate. This mortgage will be paid off by 2024 September. Conservatively, that is right about 2 years, right? That's like 2 years on here, a year and some change on here, and then like a year over here. So we're looking at like we're looking at like 5.5 years or less. 2 mortgages, a car note, credit cards, right? And student loans. We can just throw that in there. Student loans, she doesn't have a lot of student loans. Debt, okay? And when it's all said and done, by 2024, your cash flow conservatively is here on a monthly basis. And that's just using the debts. This is not calculating you making more money in the business, getting a raise, doing another deal, whatever. Okay, we're not even factoring any of that in. Just factoring in current income with current debts and current cash flow. We get this number right here. Okay? Times that by 12, you get 44,688. Here's what's really cool. She's cash flowing this. My friend is debt free. She has equity in what? Both properties. 250 plus thousand conservatively, right? All these properties are going to gain value over the course of 5.5 years, are they not? Of course. Line of credit, 30,000 plus, give or take. You figure you open up a couple of more lines of credit on the personal side, on the business side, who knows? Now, on to the fun stuff, okay? Listen, if you're completely lost, if you're here for the first time, and you're trying to figure out this velocity banking thing, I highly recommend you watch some of my older videos, catch up. I highly recommend you take some action and seek an accountability partner, whether it's me or someone else, all right, that can teach you this concept. I'd love to teach it to you. I'd love to serve you. It's part of my purpose in life here, is to serve you in your personal finances, okay? So I have a scenario for my realtor friend in Indiana, okay, which is in the real estate game, all right, because this is my goal. I'm gonna get there, all right. I'm building right here. I'm building the kingdom, helping people out. I'm helping other people build their kingdoms first, and then in return, my kingdom gets built in the process. All right, man, I'm getting so excited. Oh my God. Let me tell you a quick story. December 13th is a big day. It's a big day. Let me tell you why. Denzel's going to do his chunk towards a specific debt and increases cash flow by 212. Oh my, I can't wait. So pray for me. I'm gonna pull from the line of credit. All right, my line of credit right now, the balance is just under $1,000. I have pretty much most of my expenses paid. Now that loan that I have is coming up, and I'm about to whack it. I'm about to whack it. Okay, I'm about to wipe it out. Get my cash flow. Like, give me my money now. Okay. Anyways, here's the plan. Indiana. I'm in Florida. All right. Here's my thoughts of what I'd like to do with this person right here. Listen, we'll just buy some distressed properties every now and then. Okay, every 3-4 months. Wholesale, 65% of the ARV. Some of you think I'm crazy. I know it can be done. All right. We're either going to fix and flip the property, whether it's a home or a rental. Okay. And I say, listen, I'll invest in the rehab costs. Okay. You get the whole property, and then whatever the rehab cost is, I'll pull from my tax-free bank or my line of credit, because I should be able to have some money 5.5 years from now. Ho ho. Listen. I'm gonna be like, I'm gonna be running. Okay. So I'll invest in the rehab cost as long as we're producing cash flow, and some cash flow. Very simple. I don't think it's that hard at all. We look at properties that are beat up, need work. We turn them into dream homes, and then we sell it back to the people that want the American dream. And because of my honor and respect for those people that buy properties, when I get older, right, and I'm, buying a property, right, investing in it, buying it at wholesale, right, making a ton of money just on the sale of the home, I want to be able to talk to that person that buys the home and be like, hey, listen, I know you just bought a $400,000 home or $350,000 home. Would you happen to know anything about the velocity banking method? Okay, it's how we acquired this property to get you to buy it. Okay, you just got a 30+ year mortgage that you're going to pay 2.5 times on. Instead of doing that, let's team up together. Let me show you this concept right here. My realtor friend will be with you, okay, because she lives in Indiana as well. And you guys can go to some workshops together and network together and pay off your property in 5 to 7 years. Does that sound great? Yes. Awesome. Okay, cool. So we want to make sure that when we're investing in properties and then selling it, that the end buyer, the end user, knows how to pay off that product effectively and keep going on, right? So last but not least, at the same time of doing this for her, here's what we're going to work on when we're debt free. Right, we've got our wealth and investment column, and we have our legacy column. All right. So in the wealth, pretty simple. Keep investing in real estate. That's her thing. Let's keep doing it. Your business is the real estate. And then I know you had your 401k, but we can get a little smarter than just investing in the 401k. All right. You're paying through your teeth in fees. I'm going to do a video. I'm going to get a lot of my clients upset, okay? Because I'm going to do a harsh video on 401ks and IRAs and TSPs and 403bs, and I'm going to expose how much freaking money you are paying in that damn 401k that you think you're getting a nice match on, and this and a write-off and a taxable deduction and a matching. What did they feed you? Right? You gotta really think about that. What did they feed you? Okay? we got to get smarter when it comes to investing in the real estate and the stock market, right? It's so simple nowadays. You can do it yourself. There's so many apps. There's so many like awesome trading platforms and companies and gurus out there like teaching some simple, easy, you know, simple tricks, simple rules. Tony Robbins talks about it. Dean Graziosi, freaking, all those guys. All those guys, all right? Stocks and currencies, all right? I don't think it's as difficult as they make it seem, right? And honestly, that's play money. That's play money. You're not hoping and praying that you make all your wealth from here. You just play with it. You make a ton of money, cool. You lose some money, cool. I still got my real estate. No problem. It's a real asset. This is play. You're just playing with digital money. That's it. Now, legacy side, we get our tax-free bank in order. Get that policy, right? Which backs up everything, okay? We establish your kingdom authority and leadership, all right? And we hold on to things like farm and land and gold and silver, right? You just buy these things and you sit on them, store them, put them in the bank account, all right? Farm, grow some crops, grow some animals, right? Raise a farm, be a shepherd, right? Own land all across the United States and abroad, right? Why not? Why not? And then establish the estate, which transfers all the wealth when the Lord calls you up, right? You should die empty, right? Think about that. I believe you should die empty. I mean, release all your potential out in this world. Don't take it with you to the grave now, right? I heard someone say one time that the wealthiest place on earth is the cemetery. You know why? Because there's books that have never been written. There's businesses that have never been started. There's ideas and products and services and systems and platforms that have never been created or established because of the untapped potential of those individuals that died before their time, right? So, in my opinion, when you're ready to die, you should know. Like, I think that when I empty out everything and give it all, I'm ready to die. All right, Lord, let's go. Take me up. Let's do it. I'm excited. You should not fear death, okay? You should conquer it. You should have an affair with death, and it just keeps going more and more and more, right? So I hope this helps. Hope this concept helps. All right, if you want to reach out to me, if you want to do some work together, check out my links below. I have a Patreon page. I have a website coming soon. I've got shirts coming soon, come the new year, all right? And to just update you a little bit more, I'm going to be reorganizing some things on how I deliver to you, all right? It's getting a little overwhelming now. A lot of people are reaching out to me, so I know I must be doing something right. I'm getting really excited. I love what I'm doing. I love you guys. Thank you for all the support, all right? I look forward to serving you. Let's have a wonderful day. God bless.